And we're starting. How about that? Ladies and gentlemen, thank you for joining us today. I am Frank Chaparro, Director of News at The Block, and you are joining us for The State of International Remittance, presented by Apifiny. We've got a really nice panel lined up for you folks today. We're going to be diving into the state of remittances in the midst of this, COVID-19 era. And we have three panelists joining us from Apifiny, our sponsor. We have their head of business development, and that is Thomas Trepanier. He's got a good background in financial services, over 20 years. Spent some time at Brown Brothers Harriman and the Bank of New York Mellon. And then we have Lisa Nestor, a director at the Stellar Foundation. Thank you so much, Lisa, for joining us. We have like two Peace Corps people, right?
We do.
We do, right? All right. Maybe we can talk about that later, but Lisa was in the Peace Corps. And then my good friend, Ashish Birla, SVP of Product and Corporate Development at Ripple. It feels like just yesterday we were at the Fortune Conference in Montauk, right?
That was too much fun. You get me into trouble, Frankie.
I know it was, and now here we are, remote, far away, but that's not going to stop the fun and the excitement of today's panel, which is about remittances. So I guess the first question, which I alluded to in my ad hoc intro here, is, when we think about everything that's happened over the course of the past 8 months, a lot of things about financial infrastructure, the global economy, and the way money moves and works has been illuminated by this crisis. The fact that, people are out of work and governments are trying to send them money, and it's sort of, been blockaded by all of these impediments of the existing infrastructure. The fact that you have remittances down in many countries because you have folks that can't get to stores. So many different issues. And so I guess to start things off, to kick things off, we'll go to you, Thomas. What about this crisis, this economic and health crisis what has it revealed about the remittance market from your perspective?
Well, it's I think it's actually, it's to your point. Yeah, it has had some downside impacts on people's behavior and their needs overall. But I think it's from a business perspective, and certainly from our industry, our viewpoint, I would say that it's the greatest increase, or the biggest thing that we've viewed has been an intellectual explosion on the future thinking of our industry. So innovation. So it's really been people have pivoted. There's a big jump in online commerce, surge in digital payments, and quite honestly, digital wallets and shadow banks have really been the greatest proliferation overall. And it's the online currencies have gained in value considerably. And look at what Bitcoin has done over the past 5-6 months. It's incredible. And let's just say the value of the global transactions has also spiked as well. It's we're at a crossroads.
Yeah. So what has that meant maybe for obviously we've seen things like stablecoin, the proliferation of stablecoin and volumes of those increase. But in terms of, how this crisis has impacted traditional sort of, money transmitter businesses and remittance businesses, Lisa, I'd be curious to get your take on what's that look like, if you're in a emerging market and you can't get to the store at which they have the Western Union, what are you going to do? And so we've seen a drop off in remittances, but has that either, increased digital alternatives or maybe pushed those types of firms into a different direction, to Tom's point?
Yeah, no, I think, obviously COVID has been a huge macroeconomic shock. I think the figures that I looked at most recently were looking at, just a drop in remittance payments across the industry in the 20% range. So, it's 20% less income that's being sent home. And that obviously has, really sad repercussions for the individuals who are counting on those funds. From the Stellar perspective, there's also another layer to the story, which is the businesses themselves that facilitate these payments. And in my role at the Stellar Development Foundation, I work with a lot of these businesses. They're our partners. And so, for them, this is also a loss of revenue. This is a total change in, their kind of everyday business and operations. And so I think kind of one anecdote that felt like a win in our ecosystem, maybe in a really dark time, was, we have a partner in particular that, had much of their remittance payments collected in person via networks of kind of community grocery stores, for example, where customers would come in, give cash, send a payment home. And so obviously that flow of funds was disrupted as we had the mass shutdowns. And so what our partner was able to do was to launch a new corridor. There was anchor, what we call anchors on the Stellar network, basically a payment gateway corridor available on Stellar for another country. This is a market, this company in particular, it didn't have a huge audience around it, but they launched some digital marketing campaigns, deployed this new corridor easily on the back end with Stellar, and they were able to kind of start a new customer segment and flow of funds that really helped to support their business. And they've seen it grow, 3x in terms of the volume of payments they're processing to that market for customers. In particular, this was for Nigeria. So I think, that was kind of, when we think about how a platform like Stellar or other distributed ledgers are really supporting remittances, it's infrastructure. And so for remittance companies to be able to quickly deploy new payment corridors at an infrastructure level, I do think that's something that's exciting for us to see. And then I guess one other thing I'll say to your point.
Are you talking about sort of you guys sitting on the back end, not necessarily
Mm-hmm.
facing these end clients, but refurbishing, the core infrastructure of, some of these remittance companies?
Sure. So traditionally, this partner in Europe, they would execute their payments to a country like Nigeria using more traditional flows. And through their integration with Stellar, there's now many companies that can offer them a new kind of payment gateway infrastructure to send cross-border payments. Mm-hmm. And so, when suddenly they had a macroeconomic shock that affected how their customers, how they could reach their customers, slows down their ability to process payments, which of course hits their revenue, they can look at Stellar and say, can we quickly launch new payment corridors? Can we quickly work with the new partners and kind of try to, on the retail side, market to a new customer base, but on the infrastructure side, our ability to work in a new region, our ability to kind of launch a new payment corridor is quite simple. It's all on one network. It's all very standardized, so their ability to kind of launch payments into a new market, within a period of a month or two was quite fast. And I think big picture, that's what we see infrastructure like Stellar really enabling for remittance businesses, the ability to have many different countries and corridors that they can execute with a single integration.
You haven't really mentioned like where Lumens fits into this. Have these tokens tied to these networks become less relevant to the build out of, some of these remittance infrastructures?
Sure. So I would say at this point in time, no. So the way I look at Lumens is Stellar is a multi-asset platform. Fundamentally, what we do is tokenize financial value. Typically, that's in currency because that's the money that most of the people in the world hold. So if we want to do a remittance payment, we're going, in the example I was just speaking to, from euros to naira. However, right now, Lumens are the most liquid asset in the Stellar ecosystem, and they provide sources of liquidity for value to move across outside of the traditional banking system. So, while a retail remittance customer may not be sending Lumens when they're making a payment from Europe to Nigeria, on the back end, they may definitely be leveraging liquidity tied to Lumen fiat pairs in order to execute that transaction more peer-to-peer, faster and more quickly. So Lumens definitely are oftentimes in the flow of funds for the transactions we're executing across our network.
I feel like there's a similar story at Ripple, right? And you know, Ashish, you can correct me if I'm wrong, but you know, there's been reports on the firm kind of resetting its mission to kind of penetrate Wall Street with XRP and rather build out infrastructure that can support maybe e-commerce platforms and maybe to a similar degree, help them sort of build out this similar type of infrastructure. Over the past few months, are you guys doing similar things as Stellar, or does it look different?
I mean, I think we've been at this for a long time. Coming on 7 years, and we took a pragmatic approach. When I got started in 2013, there wasn't liquidity around digital assets, so we started laying the infrastructure, the connectivity. But then things started changing in 2017, 2018, and that's when we started layering in the ODL product that leverages XRP. And fast forward now a couple of years, we launched that product late 2018. 20% of our transactions over RippleNet leverage ODL or XRP. And why I think, back to your original question, COVID has been a catalyst, but there's two sides to this story. Number one, if you're on the sending side and you're a digital savvy remittance provider, a fintech, this is your broadband moment. This is where folks are jumping on and adopting new kinds of mobile apps because they can't go into a physical retail store. So they want a faster connection. They want to leverage RippleNet and ODL to get into a new corridor without having to open up bank accounts, because that's what ODL does. It removes the need for pre-positioning capital at the destination. You use a digital asset, XRP, instead. But the other half of this story, unfortunately, hasn't panned out all that well. Meaning, in a lot of countries, the beneficiary is still left with the same tools pre-COVID. It's not like they're becoming tech savvy or tech literate just because of COVID. It's not like they have the money and access now because of COVID to go get a digital phone to allow them to get a digital bank account or get banked, as a whole. So unfortunately, the story is two sides. We do need to work on the beneficiary side. How do we get them banked? But a large part of that is not a technology problem. I know that's hard to hear, being in blockchain and working in Silicon Valley, where you think you can solve everything with technology, but unfortunately that's policy, that's literacy, and that's going to take a lot of coordination from a lot of folks, including governments.
Well, I feel like the problem is you can open all these new corridors until the cows come home, but to Brad's point, who just dropped a question in the chat, if you can't properly open up one of these accounts and someone's sending you tokens, but you don't know the way to sort of navigate these platforms as the retail user, what do those new corridors matter?
But that, I think that's, the onus should always be on products to make the experience of technologies like Ripple or Stellar easy to use and really seamless. And, there's a point that I wanted to make, which I feel like we're kind of dancing around right now, which is, from our perspective, this also reiterates the importance of open financial networks and having global infrastructure in which innovation can happen rapidly and it can happen locally, so that we can really have entrepreneurs creating access points that serve people, and we don't have to wait for, always kind of like large incumbents to innovate in order to reach new consumers. A kind of simple example of this is, we have a company based in South Africa that's now integrated a WhatsApp native Stellar wallet. And so it means that essentially through just texting and chatting with a bot on WhatsApp, a customer can start to hold value digital asset value, in this case, 1-for-1 backed ZAR token. They can send payments to other people, and you can continue to build out an economy around that where you can start doing things like merchant payments. And, South Africa is like a relatively highly banked place, but you can imagine scenarios like this happening in other countries where by having open financial infrastructure in which entrepreneurs and innovators can join the same network and try to create access points that are more workable or more realistic for their communities. I think this is a migration we're seeing that, at least for me, is very exciting.
And I mean, just to build on that point right there is, the reality is you can bring in, blockchain, you can bring in, digital tech, but you cannot forget about the folks that still need cash. And, in the Philippines, yes, COVID has accelerated cash, but it's still 98% cash. And, it's from a product guy perspective, saying that cash is like one of our successful product launches on RippleNet, it was hard for me to hear given like, hey, what's going on? We need some mobile. But in reality, there are folks that are ready to move and want connectivity via these open platforms. And some of them are traditional cash outlets. For example, a cash outlet in the Philippines that delivers cash to pawn shops. That was the big innovation and aha moment, a couple of years ago for me. And that's been a key move in terms of building out the network. So, I think it's a combination of, yeah, let's go move digitally forward. Let's get these mobile wallets. But also, let's not forget about the people that need it the most often are not going to have those tools. So let's make sure we're bringing and innovating on the traditional side as well by bringing them along.
I agree. No, it's fully agree on my viewpoint as well. It's we need to be the ones that are going to be bridging the gap from the wholesale level all the way down to retail, and it's incumbent upon us to affect that change. And I think all three of us, the firms that we're representing, we cover that for the most part. And I think it's just a matter of seeing some of the traditional side of the business, some of the players on that side finally open up to embrace that.
Mm-hmm. Who's winning though, Thomas? Who is kind of at the forefront of, reimagining the infrastructure? Is it the Western Unions? Is it companies like Stellar and Ripple, or is it just regular fintechs who are trying to figure out how to rework remittances without DLT or blockchain?
I think it's the firms like us that are on this panel. I mean, really, quite honestly, to not to pat ourselves on the back, but
good answer.
It's to be honest with you, I think the
well, why?
remitters,
Show me to quote what was that 90s movie? Show me the money.
Exactly. Well,
What's the data? What's the data that suggests that over the past 6 months, Ripple, Stellar, Apifiny have moved the needle in terms of providing better access to financial infrastructure?
Sure, I can do that. So, I mean, it's case in point. But let's go back to your question. The likes of Western Union and the other remitters that are out there, they're playing catch up. Visa, MasterCard, my former employer as well, so a few of them as well. They're part of the traditional rails, and I think that what we're starting to see is we're filling a gap. And I think the past 6 months, even in COVID or even before that, have been a good example. I'll give you a couple examples. We're working with a few traditional stock exchanges that that actually get it. They understand it, and what they're doing is they're starting to launch projects similar to that would enable them to digitize IPOs, as an example. But the problem that they have is they need to have the cash leg is something they also wanted to make sure was digitized as well. So there's some interesting scenarios that we're seeing open up, and those are as time progresses, that's where we're going to start to make a difference.
Mm-hmm. I think
just to add, if you want, some data. I mean, U.S. to Mexico was one of our first quarters that we'd opened up with ODL. The product that leverages XRP to move money. 10% of MoneyGram's flows now use that product to move money cross-border. 7% of U.S. dollar to Mexican remittance flows, which is one of the largest remittance corridors, are now moving over our products. So it's happening.
I think Bitso, which leverages XRP, is seeing like 20% of, or was projected at some point to see 20% of U.S. Mexican remittances.
Yeah, so I mean, there's incredible adoption. But you know, again, you know, you're going to hit a ceiling because unless you think about bringing the traditional incumbents along or finding alternatives. So those are digital remittances. Now, you know, if you want to go higher, you either have to get the folks that need cash digitized or get those outlets on as well. But you know, it's happening at an increasing pace. You know, it's not just you know, trials and pilots. But there's a lot. There's a lot of.
What's the value prop maybe over some real-time payment networks? Like, you know, Transferwise has built a massive business on top of RTP systems, which, you know, allow people from Europe to send money to China in seconds with very little fees.
I can say from Apifany's perspective with Roxe, you know, our platform enables, we enable the banks, central banks, payment firms, et cetera, to be able to take the fiat, digitize that into a stablecoin proxy, send it on to its beneficiary in seconds, and at the same time that therefore enables them to either maintain that stablecoin for other purposes or translate or convert that back into redeem it, should say, back into the underlying fiat. So I mean, it's the technology is definitely out there. We definitely see the value and the adoption from the banks that we're working with globally is proof of that.
Mm-hmm.
And Transferwise is an incredible company. They are marketing machines. They've innovated with a great customer experience, but they built it largely on the old rails. And so it's taken them, their journey, and we talked to them early on in their journey. It's been a long journey to grab market share, but they still pre-position money in India, pre-position money in the Philippines and in Mexico. It's still very costly for them to run their business. And I think that, back to Lisa's point, I think you're going to see this openness and folks adopt open networks and put these things together like Lego blocks. Whereas Transferwise just built I mean, it's incredible what they built, but they built a proprietary closed loop system. So I think that's going to be analogous to the internet. And I think you're going to see more innovation on that side.
So is that something that Ripple is open to doing, you know, instead of sort of just having a lot of these products that are built on top of, you know, XRP, maybe branching out and including stablecoin or other sort of tokens?
Yeah, absolutely. I mean, we're a product-centric company. So where it makes sense and it improves the customer experience, we use the XRP token and ODL. You know, first with cross-border payments, now we're seeing our customers use new products that we recently announced, like loans for capital efficiency. So of course, yeah, but into India, for example, you can't do that. So we are using things like stable coins. I mean, stable coins to me are just digital fiat, and you know, that's been around for a long time. But you know, into India, for example, we do not use ODL. It's not legal. You know, in the country, regulation is sort of a mess there. We're hoping it turns around. But that's a good example of when we do not use the asset XRP.
That's interesting. Kind of the same question for you, Lisa. You kind of alluded to that being the case, that, you know, you're open to this being more of an open network that you can kind of support different types of assets on.
Yeah, listen, I mean, I think about the Transferwise value prop versus the Stellar ecosystem value prop a lot. And I would think about it kind of at the enterprise level as well as the retail level. So, you know, Transferwise is a great company. They've done amazing things. They have an amazing product, which, you know, lots of people are really satisfied with. They've raised $700 million or more in order to build the infrastructure that they've set up all over the world. And, you know, I think that's
from Ashish.
Yeah, I think that's great, but I would say that, you know, there's a handful of companies that can do something like that. And an alternative is to create standardized open financial networks that can enable a marketplace of endpoints that we can then have many applications, many payment companies leveraging. So instead of everybody having to build all of their own infrastructure, or having a company build their infrastructure and then sell it to everyone else, we can cooperate and, through things like distributed ledger technology, build these open financial networks. And so on the enterprise level, I think that there's room for large enterprises like Transferwise to leverage these points, these new endpoints to some extent, but I do think that it's going to be challengers who really take these models and run with it. On the retail side, and kind of going to your question about, what trends do we see that kind of are showing that this part of the market is kind of winning, I do think the huge rise in stablecoins, while not necessarily directly tied to remittance, when we kind of take a step back, is moving the entire digital asset ecosystem a huge step closer. I think consumer and retail awareness, especially across emerging markets, of these types of products will bleed into how people expect to receive cross-border payments and remittances, and kind of open up this idea of being able to hold a digital form of your money and do something with it. So what a Transferwise user can't do right now is, receive a remittance from the US to Nigeria, hold that digital dollar for as long as they want, and then maybe go toss it into some cool yield farming thing that's, up and running. Mm-hmm. Transferwise can't offer that right now, and their infrastructure isn't capable of offering a product like that. But companies that build on open financial networks with digital asset infrastructure, they can. And I think kind of combining these new types of products with more traditional remittances is a really exciting space, and something that will challenge the Transferwise model.
And just, the numbers are already sort of playing out, at a small scale. You mentioned, Frank, Bitso's numbers of doing, remittances. They are processing remittances for a number of different companies, largely through RippleNet, but they're an open platform, and they've taken market share that took, the next largest incumbent, digital incumbent, Remitly, 6-7 years to build. They did it in 4 months. And it's, again, by using these open, protocols, but an open network, they were able to go after 4 or 5 customers and get them signed up live, processing payments. Again, largely through the RippleNet, but I think it's starting to play out.
Yeah, well, I want to correct the record. Too bad my colleague Ryan Todd isn't here. He sometimes co-hosts my podcast, and one of his main jobs is to correct me when I get numbers wrong. So the Bitso figure that I was referring to was a projection from the CEO. He was hoping to capture 20% of the US to Mexico remittance corridor by the end of 2020, which is pretty significant, especially since it's, to be frank, pun intended, it's not necessarily a company that a lot of people have heard of. But on average in 2019, Bitso's volumes accounted for 2% of the US to Mexico remittance market, and a lot of those remittances were done vis-a-vis XRP. I want to bring it back to Tom. So if you think about, we've kind of gone through the pros and cons of Transferwise, and what is limited about their infrastructure, and maybe what's a positive aspect of their sort of interface. But what can a company like Apifiny do to kind of, maybe bring them on a similar playing field as a Stellar or a Ripple?
No, absolutely. No, happy to explain. So our Roxe platform provides a way in which banks, central banks, and other payment providers, as I mentioned earlier, to send and receive the value within seconds. But we don't necessarily we're not forcing our clients to use just the stablecoins that are created on our platform. So we're agnostic. So that's one thing that I think is of great value. We can take in any other cryptocurrency and use that on our platform, whether that's XRP or any other that's in existence today. That provides the flexibility. We also offer, from a trading perspective, one-to-many access to all of the cryptocurrency exchanges that are out there. So end-to-end, from trading through to settlement, we're able to provide that one-to-many connectivity point. And it's quite honestly, it helps So we're not subject to any group of fiat currencies or any particular cryptocurrencies for that matter. But we can work with plug and play, work with anyone really.
Yeah, no, that makes sense. I want to bring the conversation back to stablecoin. I think we're over $10 billion in total supply. A question that a colleague had for me this morning that he wanted me to present to you guys was, why can't a lot of what Stellar or Ripple, a lot of what you guys are doing just be done through stablecoin, or to put it more directly, why couldn't or why shouldn't XRP just be a stablecoin? What are sort of the added bonuses of having a fluctuating value currency in remittances?
Yeah, I mean, that's a good question, and it goes back to the whole premise of blockchain and digital assets, and that is removing trust. So today, you trust HSBC, JP Morgan, BAML, Bank of America. They move 80% of the remittances
I think
globally.
There's someone from Morgan Stanley listening in, so we trust them as well.
Morgan Stanley, another great one.
I think Societe Generale. We'll trust them too.
Key Bank, Silicon Valley Bank, all the big players. But you trust them to move money. 80% of global remittances go through those three banks. What a counterparty-free digital asset, XRP, Bitcoin, Lumens, what they do is they remove that trust. I don't need to trust the counterparty Bitso in Mexico. I remove all those legal, documents, and essentially what you're doing is you're trusting Citibank to move your money globally. And a stable coin is great. It standardizes fiat, makes it interchangeable. I can use it in all sorts of different wallets, around the world. So it's a great innovation. But don't mistake. You're still trusting you're still trusting Frank your money in Tether. You're still trusting those guys. You don't know where it is. There's counterparty risk to that. USDC.
I think a lot of people don't talk about the counterparty risk associated with stable coins.
Yeah, and that's a problem. And it's sort of crazy today. You really don't bank with anybody. You bank with Bank of America, Wells Fargo if you're unlucky. You trust those folks to hold your money, but then all of a sudden you're ready to trust folks you never heard of that won't give you audited bank accounts with Tether. That's a big risk. And given, I don't know what the stats are with Tether these days, but it's billions and billions that is underpinning liquidity in crypto. That's a bit of a problem. And so I think there needs to be more legitimate players in the stablecoin space. I think they're stablecoins and the counterparty-free digital assets like XRP, Lumens, Bitcoin can coexist. You need them. You need on and off ramps. You need to remove the trust via a counterparty-free digital asset.
You want to weigh in here, Lisa?
Yeah, sure. I agree with much of what Ashish is saying, and I think there is kind of implicit counterparty risk that we just don't think about, I think, every day. And what digital asset infrastructure does is just kind of bring that to the surface. If I'm holding my money in Citibank and it goes bust, I can't go to Bank of America and say, give me my funds back. That's not how it works. A dollar is held with a counterparty. And, I agree. I'm excited to see the evolution of the types of institutions that are issuing these assets. But I think that they need to, I think counterparty-free digital assets and, counterparty-based assets will work together in an ecosystem. And they're, when stablecoins first emerged, I think because they weren't reserved back, we didn't really, at least the first generations of them, at least in the way that we typically see them on Stellar, which is backed by the currency that they're representing. The counterparty question it didn't come out as much, but within our ecosystem, that's very apparent. It's important, and the big value that an asset like Lumens is providing is it is allowing for the exchange of two counterparty assets in a trustless way. Whenever we're crossing international borders, there's legal and financial implications to doing those types of trades. And I think that cryptographic assets really unlock our ability to create efficiency in these markets and get rid of, essentially the gatekeepers that do this. The three institutions that I guess we can trust to move money from one country to another. It gives us a much more open and decentralized way to enable those types of exchanges.
Mm-hmm.
And I'd counter a little bit on that, is to say that I definitely can see their point on the counterparty risk without a doubt. But where we've found great success with stablecoins as well is working with central banks and launching the CBDCs, because 9 times out of 10, either the central banks, they have already gained a foothold in creating their own CBDC, or they have a committee that's working on creating one, and they're working on pilot programs, so on and so forth. Through the products that we have, within Apifiny, Roxe is an example, we're able to instantly provide them with the ability to create their own CBDC, mirroring the underlying fiat, and at the same time provide a highway through which they can send the underlying players in the marketplace can send and receive value cross border. So it's there's room for it both, I think, at the moment, and remains to be seen where this goes. But I think it's also a good segue. It's we're talking about digitizing currency, but I think that, as Lisa alluded to earlier, in terms of digitizing other assets, this will definitely open up a lot more of creative ways in which we can help transform the traditional side of the business.
Mm-hmm. I mean, CBDCs, not to be confused with CBD, has become quite the buzzword of late. What is it going to mean?
Yeah, both are buzzwords.
Both are buzzwords. Well, we still haven't figured out which one's more overhyped yet. I think the jury is still hung. I was telling the panelists a story yesterday about my grandfather and his affinity for CBDC infused water. In many
CBD.
respects, CBD. I mean, it's crazy. They're so interchangeable. But there's a question here, which is, to some extent, CBD has penetrated regular folks more than any of the stuff we're talking about probably ever will in the near to medium term. But as it pertains to CBDCs, how does this impact global remittances, if at all?
I mean, the central banks still need the private sector. I mean, many of them have come out and said, some predominant ones in Europe, that come out and said, well, you don't really need blockchain to create a CBDC. May or may not be the case, depending on their need. I think it's they're hedging a little bit, and they may not be necessarily ready to make the leap into this on this side of the fence. But I think that, at the end of the day, where we add value is you're still going to need help when it comes to cross-border from an FX and KYC AML standpoint. So the private sector can certainly help. I can attest to that's what we've seen in our own personal experience at Apifiny.
Mm-hmm. Yeah, Christine Lagarde, I mean, just as recently as September 22nd came out and made a renewed push for a digital euro.
Yep.
And so
then again, though, she comes out and says that, but then on the securities side, they have a committee that's come out and kind of put their own stake in the ground, saying that digital assets need to have a legal entity, which kind of, from a DeFi perspective, kind of turns it on its head. It's kind of pushes, it grinds it. It comes to almost like a grinding halt when it comes to the potential for that at the moment.
Mm-hmm.
So we'll see where we'll have to watch that space, I'm sure.
Interesting. So it's not blockchain. What is it?
Well, I think it's, from DeFi perspective, you have to remember that it's giving the individuals more control of their money. So you don't really, there's no real way in which you know who you're facing off with. So I think from we talked about counterparty risk before, that kind of opens things up quite a bit, a lot more. So there's I think the regulators are trying to get ahead of that and identify how that can play out. Now, as far as blockchains to answer that particular part, they're still trying to hold on to the control that they've always traditionally had, because they are lender of last resort, and their whole goal is to manage the monetary policy that they have within their own market, and I think that most of them are looking for ways to maintain that role. So
yeah, and I think it's a good question. I mean, if you look at the latest spec for how China is implementing their digital currency, they're not using a blockchain. They're using a highly scalable database. Why? Because you need to do billions of transactions per day. And in China, I mean, is in a whole different category. I mean, they don't necessarily need to be concerned about the private sector or the commercial banks, so they can roll this out pretty quickly. But I think a point that was made is, I don't think these central banks are going to all of a sudden start trusting each other. I think that it's unlikely the United States is going to open a bank account with China's CBDC or Argentina's central bank. So that's where companies like ours
Edward Boyle in the chat makes a good point. Most of all the central banks in the world hold US dollars.
Well, that's one way. I mean, what about folks sending money the other way? So, point being, you still need, the private sector. Traditionally companies like BNY, we're huge in this space, but there are opportunities for new kinds of technologies that leverage digital assets to bridge these CBDCs. Again, like there's no UN for the world, there's no central bank for the world, and that's for a reason. It's highly political, and again, a neutral digital asset is a good sort of bridge between these different CBDCs around the world.
Mm-hmm. Well, I think this segues perfectly into the question of Libra, which when it gate crashed the crypto world in June 2019, almost feels like 7 years ago, if not longer, right? Like, this thing has been like in limbo forever. But in any case, the whole idea when it came onto the scene was that it was going to serve billions of people, and they emphasized banking the unbanked, and ultimately transitioning from this permission blockchain to a permissionless one with this basket token representing many different currencies. And they've pivoted a few times, but just, I guess, from what we know about this project, is it going to be something that maybe is competing against the Stellars and Ripples of the world, or just another stablecoin? And how do you imagine it fitting into remittances if they're able to figure out this way to create an on-ramp for folks around the world leveraging their 2 billion person network? It could maybe give a lot of incumbents a run for their digital money.
Yeah, I think so. I'm happy to jump in here. I think, I certainly think Facebook and Libra as a platform with, as you mentioned, 2 billion users, has, a chance at becoming the world's largest banking platform. I mean, I don't think that is a complete, that's a completely insane idea. But I think what this does, and, the CBDC discussion also kind of was touching on this, is, ask at what part of the tech stack does a company like Libra really make sense? And so, I think there's a huge amount of opportunity for any digitally native platform that has built up such a huge consumer base to, start extending payment as a service products, to start offering types of financial services to those users. I do, however, question why they need to own and operate an underlying infrastructure to do that. And in fact, why they would want to. I think all of us here have some experience in how complex and difficult it is to, build large distributed systems that are efficient and operate well, and then B, kind of garner adoption and trust in them. That is a non-trivial task. And so, I think there's a lot of opportunity. Libra, I think, really pushed some interesting ideas into the space, but our opinion is that platforms can offer access, but to try to own the infrastructure layer that kind of tracks and traces and provides a source of truth is kind of like unnecessary at this point. So I'm excited to see how the project progresses. And I do think it could be something that interoperates well with the infrastructure that myself at Stellar Development Foundation and others are building.
And I would venture to say that it's I would concur with Lisa on that. It's at the end of the day, our view would be more that it's going to remain as a stable coin, and they're going to need to be more open to taking in other forms of payment at the end if they want to be successful, because maintaining just that particular currency pigeonholes them. And not to mention the fact that they're building, they have the community at their fingertips based on given where they are, but they don't have any real proven track record in terms of the knowledge and the I'd say the scope.
It's sort of strange, with Libra, it feels like Google in 2001 saying, not that internet, how about my internet? And it just really doesn't make a whole lot of sense. I do think what they have, and I think a lot of blockchain companies do not understand, is distribution. So billions of users around the world. The flip of that is, like, I don't know many unbanked people using Instagram and WhatsApp. So, I mean, that just seems a little ridiculous that the marketing is about the underbanked or unbanked, but they're going to distribute that via Instagram and WhatsApp. Seems a little strange and lacks some authenticity there. So, I mean, I think that's what I loved about this conversation. It's like, hey, we've been working in this space for a number of years. It's not sexy. It's not about quick, on the dime movements. There's policy that we've talked about with CBDCs. There's getting folks banked. There's actually tying into cash networks. These are real problems. If you want to solve remittance, it's not about making Instagram blockchain. I also think it's super smart by Zuck. Engineers these days, they want to work on blockchain. Hey, come work at Facebook and you get to be part of like blockchain. It's super good marketing for talented engineers that are coming out of undergrad.
Interesting. Well, I've been loving the back and forth, and I'm glad you're loving the conversation, Ashish. And we got to let these guys, Edward Boyle and James Hyatt, do their own panel at some point. They've been going at it in the chat. So distracted that they're really. James, you and Ed got to get a drink at some point and hash this out. I want to open it up to questions. I feel like we've really covered a lot of ground. There's a few here in the chat. Let's see, we got some. Yeah, he said sounds good. Ed versus James. Let's webcast it. Let's do it. That's what I love about this live stream is people. We haven't got any anti-Ripple stuff yet. That's
there you go, Frankie. You just prompted it.
Yeah, here it comes. The floodgates have been opened.
Why don't we comment on Frankie's attire and let's get to
We'll save that for another webinar. I guess let's see. There's some specific questions here. So for Ashish, how did Ripple Intermex venture pan out? How do you find it challenging to integrate ODL with the technologies of other competitors for Intermex? So this kind of gets to this question of, interoperability that we've sort of been talking about throughout the conversation. You want to take a stab at that?
Yeah, Intermex is a Ripple customer. I believe they're in the top 5 top remitters from U.S. to Mexico. I think this goes back to this question. This business is not sexy at all. And if you're talking about Intermex is a fantastic firm, but a large part of what we built over the last 7 years is figuring out how to make the old world connect with this new world. The on and off ramps connect with this new, internet of value. And so, Intermex is a fantastic company. We're not quite, live with them yet, but that is something that we're working on, trying to close the year strong with them. But again, they have such strong volume and such a strong customer base. if we can make it more efficient for them, I think back to some of the points we were talking about earlier, but potentially we open up new corridors for them. So they're a big player from US to Mexico, but why can't they be a big player in other corridors using this new technology? And so that's what I'm really excited about with a lot of our customers, but with that one in particular.
Mm-hmm. Someone hit you with a question earlier in the conversation, Lisa, about whether or not there are significant companies utilizing Stellar to settle international payments with their suppliers or customers. Is that something you're seeing?
Sure. I mean, I'll hold the definition of significant to that person asking the question, but yeah, absolutely. I mean, something that's been interesting for us is we early on kind of focused on remittance as a use case, and worked with a lot of companies in the remittance space, and continue to do. As we kind of built up some of those volumes, we've seen a really strong growth in the corporate payments vertical as well. And particularly in supporting execution of things like corporate payments across emerging market corridors. So, and I think that has been exciting for us. And, the way this technology works is those flows oftentimes offset each other and kind of make the entire network that much more efficient. And, I think that there's a number of reasons why we've seen growth in corporate payments. I mean, from just a practical standpoint, less customers. It's kind of, if you're launching new businesses or line of business, it's a very practical way to, start with larger value transaction sizes. It's also less of a margins business, which, I'll be the first to say that, our end goal with Stellar is payments as fast and as cheap as possible. But when you're launching a new corridor, a little bit of margin is nice to have as you're working towards creating that efficiency. So it's been really great. I would say that along with remittances, we've seen continued growth in our enterprise ecosystem around things like corporate payments, and as well touching on things like supply chain.
Mm-hmm. What about the regulatory landscape? It's something we kind of dance around a bit, and I think Ashish, you brought up a little bit about the impediments, the regulatory impediments you face in India, but just broadly, like, is there anything that the incumbents benefit from? Maybe this is a kind of a naive question, but or a question with an obvious answer, but what headwinds are there on the regulatory side that have maybe made growth difficult?
Growth difficult, or I think that it's the opposite. I think there's not. I think there's. Let's look at DeFi, for example. On the DeFi side of the business, you've seen a huge uptick in that side of the business over the past 6 months. Given that it's open-ended on either side, there's this huge opportunity for that. And as I alluded to earlier, and the European Union has made that announcement saying that they if you're going to do DeFi, you need to have the legal entity. But I think here in the U.S., back in May, we had Overstock.com digitize a dividend, and so that was a long time coming for the U.S. to see something like that. And I know from an insider view that the folks at the DTCC and others within the industry, really, it was kind of like a hot potato. There really wasn't an easy way for them to manage that. So I think that opened their eyes, and I think that the regulators are already starting to scrutinize how that's going to play out, because it's just a matter of time before you start to see interest from a broker-dealer standpoint. Both the buy side and the sell side start to get more in tune and locked in on investing there and that, because it's an area where the industry is starting to really gravitate towards.
Yeah, but surely, to Ashish's point, there is this complexity in navigating a myriad of international jurisdictions and international, legal jurisdictions.
There is. I mean, I think that's historically always been the case, and from a cross-border business, over the years, it's navigating from one market to another, understanding the different rules and regulations. I think it's the markets that start to open up and are more open to doing both on the cryptocurrency side and on the DeFi digitizing security side of things are the ones that are going to stand out, and that's where a lot of value is going to start to be moving in that direction. It also starts to if you peel the onion back even further, subjects like DeFi will start to question why do we even need the middlemen in between? So banks, and as a result, the trickle down effect, the domino effect, would mean the industry in and of itself will start to see the lines blur. And you're going to start to see a lot of what would be traditional players supporting the securities out there today start to collapse. And I'll end with this: you're going to also start to see new asset types.
Yeah, I think that, to be clear, the United States has not been forward-thinking with fintech regulation.
Aren't you guys considering leaving the U.S.?
Well, the point being is that, look at what it takes to start a fintech in the United States. I have to go to 50 states. I have to get licenses. That's $2 million in legal fees and all that. So, my hard-earned VC money, I know it's cheap these days, Frank, but that $2 million is all my snacks budget gone. So it's tough to even get started here. Meanwhile, you go to the UK, MAS in Singapore, really clear fintech regulation for non-banks. They've got really good, token guidance in both the UK and Singapore. They are screaming for companies to set up there by providing clear regulation. And by the way, that they're stealing that from the United States' playbook for the internet. I walk down my street, I see top brands, Uber, Airbnb, and Google, and so forth, all started here because clear regulation paved the way. The rest of the world followed, and that's the exact opposite that's happening here with not only digital asset and blockchain, but also fintech. It's a nightmare, to be honest, to get things set up. And with blockchain being borderless and this new world of work from wherever you can, if you're a new entrepreneur in this space, a blockchain space, I'm not going to say that the best idea right now is to get set up in Sand Hill or Silicon Valley.
Stay off Market Street.
For a lot of reasons, stay off Market Street, but go where you got clarity. The last thing you need is uncertainty when you're building a business. You have enough uncertainty. I
agree, and I think that we're going to start to see the worlds collide, and then the regulators in the U.S. To your point, Ashish, is they're extremely slow here stateside, but we'll start to see these things change once the traditional side of the business starts to gravitate and open up a lot more. And it's at that point where the regulators are going to have to pay closer attention. The OCC started it in July with their announcement of opening up for crypto custody assets, and we all know that's not going to be an overnight sensation. But that was probably predominantly because we have an insider from the crypto world working within the OCC's offices now, which is I'm sure has a lot to do with it. But it's just I think that the tsunami effect, seeing the two worlds collide, will end up happening at some point.
So, something I'd like to add here, just to kind of highlight something specific to remittances, is from a regulatory standpoint, I think we're going to see perhaps a somewhat unfortunate tension between countries that are strong remittance receivers, but also have a lot of capital controls that create tension between our ability to facilitate more efficient payments in country, basically blocking those types of activities because there's kind of seen as kind of crypto or open financial infrastructure as being a threat to things like capital controls. I would say that having major remittance receivers or countries like China and India kind of going back and forth in their policy stance, it's unfortunate because I think that there's so much opportunities in those markets. Look at things like, East Africa, China corridor and the amount of trade that's done there. And there's really big opportunities to leverage platforms to gain efficiencies in those markets. But, it's difficult. Are we done? Hello?
Oh.
Or maybe that was just me. Nope.
No, continue. I don't know what happened.
Well, that's it. So I think it will be, I think that there's a lot to see kind of going forward, but I have noticed this tension myself, and I don't think it's going to be going away anytime soon.
No, I would agree. I think that the way to ease the markets into this is one we've seen success in is to introduce again, we talked about it earlier, getting the stable coins established at the central bank level. One of the markets that we've been successful with has actually come right out and said that by leveraging the stable coin, it actually provides a way in which they can to your point, Lisa, about the capital control, that they can be rest assured that they're not going to see the constant fiat outflow from their domestic market out to the other markets. So It helps. It's for them; they get that comfort level.
Yep, that makes sense.
Yeah, in some ways, listen, the market's gonna it's gonna pan out, and it's gonna decide if India loses market share to Singapore. You know what? India is going to flip the other way. So, you saw that with the internet. You saw that with tech in general. Some ways, it'll play itself out. But it's hard to lose the lead. Like the United States has this lead in technology with the internet, and that's hard to unseat these days. So, don't want to see that happen.
We certainly do not. Well, this was a great conversation, and appreciate everyone's time, everyone's question. Just want to take a moment to give a nice shout out to our panelists for taking the time, and hopefully we can do this again sometime in the future.
Thank you.
Thanks.
Thank you all very much.
Really appreciate it. Great stuff. Awesome. Everybody be safe and healthy, and don't forget to tip your waitresses and waiters.
What currency do you want, Frankie?
With CBDC.
Yeah.
Just don't do it with Litecoin. Okay? Thanks, Edward. Thanks, Mark. Thanks, David. Thanks, John. Thanks, Lance. Take it easy.
Thank you.
Bye.